personally have, and everybody in my family, we have an umbrella policy, and some people call it a a personal umbrella policy, which is excess liability. So if you
Mhm.
have like younger drivers, or you want to protect everything you own under a titanium umbrella, that's what an umbrella policy will cover. It's just excess liability.
Welcome back to the Massive Passive Cash Flow Podcast. I'm Gary Wilson, your host. So glad to have you back listening to the show or watching, if that's the case, on YouTube, LinkedIn, or Facebook. And also, obviously, it's in 30 different podcast channels. So we appreciate you participating and learning. We got a great guest today, Jill Brumbaugh, who's actually from an area of Pennsylvania where I up there quite a bit. I'm out in Beaver, Pennsylvania, and I won't mention the town names, but Jill's literally like 10 minutes from where I am when I'm up there. It's crazy. It's just a small world. But I now a Florida resident, and Jill just happens to be down there. So maybe we're meant to go out and grab a bite to eat, Jill. We'll figure that out. But the first thing is thank you for being here. I really appreciate you joining us. And as I know you're busy, and this is a great subject today, which is all about insurance. So thank you, Jill.
Thank you, Gary, and I really appreciate you having me on the show.
You got it. So, hey, I know we were just talking before the recording, and we spoke before, and I really I love your background. What you did. You've got a great history there. Would you mind sharing with people a little bit about, go back to your college days and then take us forward because most of us weren't born saying I'm going to be a real estate investor or I'm going to be in the insurance business. We were probably had dreams of being something else. But can you take us back to that point and take us into what brought you into this business we're in, you know? Mm.
It's an interesting story. So, Gary, I attended the University of Connecticut. I have a Bachelor of Science in Nutrition, which has absolutely nothing to do with insurance. However, my grandfather and we shared the same birthday, March 22nd. And he was in banking. He was the president of a bank, and he and his brother started Brumbaugh Insurance in Duncanville, Pennsylvania in like 1956. So, and even when he turned 65, I turned 21. We even had our like big birthdays at the same time. And then I went on a job interview it was for sales. It happened to be health insurance. And I just started off in health insurance. I got my first job in April 1st, 1992. Nobody believed me because it was April Fool's Day. And then I've been in insurance ever since. And then after Obamacare hit, you kind of had to shift a little bit. So I opened a scratch agency with Allstate for property and casualty. So I've been in insurance basically like my whole life.
Wow.
I'm still in
Yeah.
it.
Well, by the way, happy birthday. So everybody listening, this
Thank
will
you.
timestamp this. This is the 19th of March. So we got 3 days for Jill's birthday. So when you guys, all the listeners, I want to have some fun here. When you listen to this podcast, do me a favor, leave a review and say happy birthday, Jill. Number one, we love your reviews. But number two, I think that'd be a really nice surprise for her to see that. Get that in from people all over the world, you know. Um, so in any case, Obamacare, that was definitely a big change in that sector of that's the business segment of insurance. And so you made it into to property and casualty. And I know there's a lot to unwrap here, but I want to educate the consumers, and partly because of my own experience, having my own homes, but also owning a lot of rental properties. And I learned about the different levels of protection. I think we used to call them forms, like Form A, Form B, Form C, and maybe there's different terminology. But let's start with the homeowners. For the homeowners out there, can you give them a little bit of background about like, hey, listen, when you buy a house and you try to go cheap on your insurance, this is what this means. These are some possible outcomes versus having proper coverage and what people call the bells and whistles. Because I can hear it out there right now. People are thinking, I need to keep my costs down. And I get that. But it's all about risk avoidance. And if they're too thin on their coverage and Lord willing, disaster, you know, hits, they could be in a real pickle without the right kind of coverage. I mean, am I on the right track here as far as
Yes, you are.
that subject?
Because on
Yeah.
homeowners, there's different parts to it. So there's your dwelling. The dwelling is the actual structure. And you can insure your dwelling either at replacement cost or like actual cash value. And some places on different things, they'll do what they call an agreed value. Like you pick the amount of coverage. That's mostly on mobile homes and like commercial. But if you go actual cash value, it's just like driving your car off the lot. It is going to depreciate every year. And it also depends on the age of your house. So the older your house is, the less coverage you're going to have. So you actually want to, if at all possible, on your main home, have it insured at replacement cost. Like a rental
Mhm.
property, because most people get mixed up in actually what it costs to rebuild it and what you would sell it for. What you would sell it
Okay.
for in the area that you live in has nothing to do with your, like the value of the home if they have to rebuild it. That goes like parts and labor. And you will get a rate increase every year. Just like if you go to the store and you buy something, it costs more. I know that people get upset because they'll say, I never filed a claim. Well, it doesn't matter. If you file a claim, yes, then your insurance will probably be high depending on how many claims and everything you filed. But it's just standard inflation. It's parts and labor. So building material. So
Yeah.
yes, it will go up. Um, but
Yeah.
that's on your dwelling. So it's replacement cost or it's actual cash value. And like I said, in some instances, you can have a stated amount or they call that an agreed value. And then you
Mhm.
have the next section goes in is on your personal property. That's your contents. So if it's
Mhm.
your regular house, basically, the easiest way to determine that is if you took the roof off of your house and you turn it upside down, that's everything that falls
Mhm.
out is goes under your personal property or your contents.
Mhm.
Anything that sticks goes on your dwelling. So that's the main two, as far as that is concerned. And it's also important when you shop for insurance that you have accurately in your house, do you have hardwood floors, do you have carpet, what you have in there? Because when you file a claim, they're going to go in, unless it's a total loss, they're going to go in and say, okay, well, you said you had carpet, so we're going to replace this with carpet. That's what it said in your policy. And as an
Mhm.
insured, it's your responsibility if you update your home or do anything to call your insurance company and let them know so they can update your policy. Just like when you
Mhm.
buy a new car, it's the same thing. You have to update your home.
Yeah.
If you put a deck on, a new roof, anything like that, you should make sure that it is, that you have the accurate information in. And then it's
Yeah.
also about
Mhm.
like your liability. So
Mhm.
liability is, if someone, and it's not only if somebody trips and falls on your property, but if you had, like we had an instance where one of my insureds called me and she was at a concert in Pittsburgh and somebody had, one of the pop tents, they were tailgating and a big gust of wind
Mhm.
came and blew the tent over and hit a couple cars. One of them was my insured. And the lady was giving,
Mhm.
I said, no, this isn't going to go against her auto insurance. This is going to go against her homeowners because it was her
Mhm.
personal property outside the home that fell on, damaged somebody else's property. Or if you have any animals, you have your dog bites somebody outside of your property,
Mhm.
that goes on your homeowner's liability. So there's
Mhm.
different things like you need to have like at least 300,000 on your liability today because people are crazy. So you want to
Yeah.
increase your liability. And then, like I personally have, and everybody in my family, we have an umbrella policy, and some people call it a personal umbrella policy, which is excess liability. So if you
Mhm.
have like younger drivers or, you want to protect everything you own under a titanium umbrella, that's what an umbrella policy will cover. It's just excess liability so that it's like that
Yeah.
on that fried green tomatoes when Kathy Bates ran into
Mhm.
the younger girl because she took her parking spot. She goes, I'm older, I have more insurance. That's what an umbrella policy will do. It's protection.
Yeah.
And then, yeah, so you have your dwelling, you have your personal property, and you have your liability, and you have your guest medical. The guest medical is if somebody actually falls on your property. Usually comes with
Mhm.
$1,000, that's free, and some of they'll go up to 5,000. Anything over that, it would go towards your liability. So that is also included in all homeowners policies. And then if you have
Okay.
anything, that you want to schedule any scheduled personal property like rings, furs, jewelry, guns that you want covered
Mhm.
outside of your home. If it's, lost or stolen or damaged, you have to have that scheduled on your policy.
Yeah. It's interesting. I do have an umbrella, like a blanket liability policy too, and I was surprised at how inexpensive it is. I thought I'm trying to keep my costs down, just like everybody, but I looked at that and I thought, I do a lot of traveling, so I'm probably a little more at high risk because I'm away from the home more, I'm out on the road more, I'm staying in hotels and things like that. But I did that, and I wish I could remember what the rate is, Jill, but um, it was definitely less expensive than my homeowner's policy as far as like the liability coverage. Um, and I think I even have one. In fact, I don't have it now, but I did have another one on the business because I think, please correct me if I'm wrong, but I think the personal one would not cover anything that was going on with the business, and the business wouldn't cover anything that was going on with the personal. That's why I had both, but I had multiple businesses at the time, and one of them was property management, which you can imagine there's lots of points of risk there. Contractors going in and out of homes and things like that. So, but and I do have a schedule too. Really for some of the jewelry and some of the watches. I've got some collector stuff in coin collection and art too. I didn't inherit. I inherited is what I did. So, but I didn't realize that that kind of stuff was covered. But those types of things, are those the things that normally go on the schedule? Like it's like additional coverage,
Yeah.
jewelry, art, collection.
The internal part of your policy covers up to a certain amount, and it depends on what company. And it also depends on like the state you live in. Like my agency, we do Pennsylvania and Ohio. And then a friend of mine, she does Pennsylvania, West Virginia, and I have West Virginia, Delaware, and New Jersey. But Allstate is, they're nationwide. They're also in Canada. But my agency, it's state specific also. So depending on the internal of your policy and any endorsements you have, but usually anything you want scheduled is anything that would be over the amount that is listed in your policy. Or if you wear something a lot, like a lot of people schedule like wedding rings, like diamond earrings, things like that, that you would be somewhat likely to lose, or a stone would fall out outside of your house. You'd want to schedule that. And then there's no
Okay.
deductible, and you can schedule it up to the amount of the value of the piece of jewelry.
Yeah. Hey, appreciate that. But I'm probably going to jump around a little bit here, but I want to go back to the cash value versus replacement value because I had on my home. This is when I first started buying my own homes and buying rental properties. My own home, I had replacement value because those homes were generally going to be more expensive. Like I usually built them new, but on the rental properties, um, I did cash value. Not at first, but once when I started accumulating a portfolio, I realized that having multiple properties, while that might seem risky to some people, it actually spread my risk out because the more units I had, like I could have a fire in one unit, but 99 other units were still up and running perfectly fine. And the cash value, I think the way we did it is they look at the purchase price and they allow me to add a certain amount on top of that. But the risk there, guys, and this is when I kind of turn it back to you, Jill, is I think that's kind of locked in. If you do the cash value, you could own a property 30 years, and in 30 years, man, things are going to go up an awful lot. I mean, am I on the right track there as far as the understanding goes? And um,
Yeah, on the actual cash value, so if say the replacement cost is 300,000, but you only want to insure it for 100,000, and you have a total
mhm,
loss, the max it'll ever pay out is 100,000. So you can
gotcha.
always go less. You can go more than the replacement cost, but on actual cash value, it's usually up to a certain percentage of the market value of it. So, and again, it varies state to state, but like on our quoting system, it'll tell you what you can and cannot do. And a lot of it
Yeah.
too, it depends on the company. But you can just say, hey, I want to insure this for 100,000, or I want to insure this for, I bought this property for 30 grand. I want to insure it for 30 grand. You can do that. But
Mhm.
usually on a house that you live in, like your primary residence, you would want that at replacement cost.
Yeah. Yeah. I mean, because it's your own home. And what that means is they literally, so even if you're in that house for 10 years, that accounts for the fact that the house is going to be worth more in 10 years. Plus, everybody's going to cost more labor, material. And now your rates can, I guess they can and will go up though, right? Over time. Because I mean, look at what happened to Florida in the last couple of years, hurricanes like, I mean, like crazy. I'm sure those rates have gone up for those poor people, you know?
They've gone. Yeah.
Yeah.
So that, yeah. So there's just so many factors that go into it, but the rates are going to
Mhm.
go up. Like people don't like to hear that. But
Yeah.
it's labor cost and it's material
Mhm.
cost. So they are going to go up. It's, and then people get upset. It's not what you would sell your house for. It's what it would cost to rebuild it. And that's
Mhm.
your labor and material cost. So usually they go up. And sometimes, just depending on the market, but a lot of it has to do with material cost.
Yeah.
So some aren't as bad as
Yeah.
others. And the other
Yeah.
thing is, speaking of claims, like before you file a claim, call your agent
Mhm.
and discuss it. Because I had a lady call me and she had a couple of shingles that blew off. So I'm like,
Mhm.
you have $1,000 deductible. So I said, get an estimate, have somebody go up and actually look at your roof and see, if it's what the damage is. And
Mhm.
contractors have, they don't write checks. Insurance companies write checks. So if you have a guy that
Yeah.
knocks in your door, they call them storm chasers, that they'll say, oh, I can
Mhm.
get you a new roof. Well, yeah, if you pay for it, but anything has to
Mhm.
be approved by the insurance company, by the adjuster. As agents, I don't have
Yeah.
an adjuster license. I can only review coverages. So I advised her to get an estimate because she said she had a couple shingles. And I said, you know, see what it would cost. And I said, and then call me back and we can see if it's worth you filing a claim. Because on homeowners, and I will say in Pennsylvania, I'm not sure about other states, just Pennsylvania and Ohio.
Mhm.
If you file a claim and there's nothing paid, then you are, that goes on your record. So if you have a legitimate water claim, and then I had a customer that had a legitimate water claim, and then one was groundwater. Groundwater is flood insurance. So, but he wanted
Okay.
to file it. I said, don't do it. He did it anyway. So now he had two light claims in a 3-year period, and he wanted to buy a little vacation like cabin. He had to go high risk because of that fake
Yeah.
claim that he filed that I told him wouldn't be covered because it was groundwater. So it's not that insurance agents don't want to pay your claims. Like we want everything to be paid. We want you to be happy, but it affects your insurance. So if he wouldn't have filed that claim,
Yeah.
he would have had an easy breezy, but it's usually two light claims in a 3-year period. And then, you're going to get a rate increase depending on, there's different levels of, claim payouts, but you want to be sure before you file a claim that it's in your best interest. Because you don't want to file,
Yeah.
if your deductible is $1,000, you're not going to file like $1,025 claim. That's not worth it. So you want to make sure
Yeah.
when you file a claim that, it's worth it.
Did you know that you can participate in class every Monday? We call it Monday Night Live, 7 p.m. Eastern, with me and dozens of other investor agents from around the country, in fact, the world. Every Monday, totally free. No selling, no recruiting, just straight up education on anything and everything in real estate. And we have a lot of good guests coming on once or twice a month, bringing in expertise on subjects like how to buy a house with crypto. Okay. How about them apples? What about AI? How's AI affecting our business? How about the metaverse, blockchain processing? We're already using it in title work. So come on to Monday Night Live. Be ready to take notes and ask questions because it's live and engaging, and you get to participate by asking questions and meeting others. So we'll see you there. Go to GaryRealEstateWithGaryWilson.com. Click on the resource tab, drop down, and you'll see Monday Night Live. And in there, you can see one of the most recent classes. but more importantly, you can register for class as many as you want going up to like the end of the year, I believe. So in any case, do that. We'll see you on Monday Night Live. Look forward to meeting you in person. Take care. Yeah. It's funny, in all those years I owned all those properties, which was a lot of properties over a lot of years. I actually only had two claims. One of them, the first one, um, sorry, three. One of them, we had just the I forget the name of the code. It's like a national building code, um, OSHA, something like that. I can't remember now. But what it was is you had for a certain number of steps you had to have handrails. So most of my properties already had handrails, but only like 4 steps and above. Well, they changed it to be 3 steps or more had to have
Mhm.
handrails. So I had a contractor go around. So just go around to the properties, whichever one needs it, need handrails, because there's not there and there's 3 steps or more. Put them in, and he did. And it was wintertime. Well, that night, he had just on one of the properties, they have to put a special ingredient in the cement to help the cement set properly in cold weather. And because there was bolts putting the handrails into the cement. The tenant's daughter, who was, probably middle age, came out of the unit, and it was an ice storm. But by the way, that was for people, if you know this place, it was Etna, right on the Allegheny River. And she came out, flipped, grabbed the handrail. The cement wasn't set yet. The handrail came right out, and she injured her ankle. She went to the emergency room and called me the next morning. She said, "Hey, don't worry, I'm not going to sue you. Just want to tell you this is legitimate." I said, "Don't worry." So I did call my agent, and he said, "No." He said, "There's nothing to worry about. This is a legitimate claim." And I didn't have to do anything, Jill, except sign a piece of paper that came in the mail 3 days later, and they covered her. I didn't have any out of pocket myself, and they covered her emergency room visit, 100%. And I thought this was the greatest thing in the world. Now, later on, I'm sure you remember this. I think it was 2004. Etna, Millville, Three Rivers, clobbered with that. There's storms that came through all at the same time. I mean, just boats up in the fountain. I was in Chicago. I left that Friday, and that was when the storms came in. Flew back home on Sunday. I couldn't believe what I saw from the plane. But I had about 12 units that got damaged by the water, and thankfully, the ones that had the damage, I had flood insurance on. There was only one that didn't, and it was down on the flat area of Etna. And what happened is the a tiny bit of the corner of the front stoop steps, they had redrawn the lines, was just inside the line. So I got what's called, there was different levels of flood insurance. It was like 100-year and 500-year. So I got, because of where it was, I got the 500-year flood. Thank goodness I got that. It was just like the year before, and the basements were all flooded up to the first floor rafters. It was, I could go on and on about that whole mess, but at the end of the day, flood insurance covered pretty much everything. And this is kind of an interesting part. I have my own crews, my own construction crews that did the work for me. And the adjusters were coming around and telling me all these amounts. I'm thinking, I don't need 80,000 to do this. Like for this one property, I said I could do it for half of that. And he said, "Well, talk to your agent." I called my agent. He said, "You know what? We'll let you be the GM on that because you have experience and they're your properties, but it's the only time you allow it to happen." He said, "You can pay yourself 10%." I said, "Great, let's do it." So we did it for less than 40, less than half what they were going to give me. And I've actually made 10% on that. I feel kind of funny saying it, but we just followed the rules. And I got all new units completely paid for from that. The third one though was a fire. We just remodeled this house, everything inside and out. And the tenant's children pulled down a cabinet that had a lighter on it, and they lit a curtain, and the curtain dropped and caught the floor, and the floor caught the wall. Thankfully, we had smoke detectors everywhere. The news showed up. This is crazy. I was literally at another fire station. They'd come. My wife was setting up a business. We were hanging a big banner, and the fire company, we knew them. They came over with the cherry picker to go up in a cherry picker and hang the banner. And on their walkie-talkies, Jill, I could hear the call coming in because it goes out over all the surrounding areas. Fire, 3 alarm, 5 alarm, whatever it was, at such and such a place. I'm like, that's my place. Holy crap, I'm freaking out. And my property manager called. She said, "Gary, you got a problem." And I said, "I know. I can hear it on the walkie talkie." She said, "What are you talking about?" I said, "I'm with another fire company and they're on the call." In any case, the news crew, helicopters, Jill, helicopters flying over my property. Thankfully, I had it in an LLC, so they didn't know my name. They're interviewing the tenant, the wife of the couple, and she's just blabbing away, singing like a bird. And the husband on the news is trying to grab her and shake her to shut up. It's calamity now, but back then it was extremely scary. But everything was paid for because we had the right kind of coverage. It didn't cover her personal belongings, but I got a brand new roof again, brand new windows, brand new kitchen, all completely 100% paid for because I had the right policy, which was basic fire. Anyway, sorry to ramble. When you talk about the different levels of coverage, like I had basic fire, thankfully it was just a fire. That's what it was. But other things are not covered. If you have a basic policy, folks, and you have a rental, you're not going to get rental reimbursement. You have to have different coverages. Would you mind kind of going down that, unraveling that part a little bit, Jill?
Yes.
Mhm.
So there's, what you call the basic fire, which is the old school. It's called a named peril. So that would
Okay.
only cover things that were listed on the policy. And then an all peril policy covers everything unless it's excluded. So all peril
Hmm.
is usually more broad. It covers more things. So, but
Okay.
a lot of times on rental properties, depending on the age of the building, you can only get the name peril. So it just depends.
Hmm.
But if you do have a rental property, you want to make sure that the people that live in there have renter's insurance because that would
Mm.
cover their personal contents, give them 100,000 liability so that in the event that there's like I'm going to sue you, somebody falls, it protects the property owner. And it also would, they have what's called loss of use, which would give them, money to find a place to stay while it's getting repaired because the landlord doesn't pay for that stuff. They don't cover your
Right.
contents. They don't cover if there's a claim and you have to live somewhere else. So that would be something. And renters insurance they are so inexpensive
Yeah.
depending on how much stuff you have. And then that's again, you can do actual cash value, replacement cost. And we didn't talk about deductibles, but the deductible is what you pay first before the insurance company pays. The higher the deductible, the lower your premiums. So, a lot
Yeah.
of people, they buy in price. You're better off to take a little higher deductible and
Mhm.
and have more back end coverage. But usually the less you pay, the lower your rate increases are over time also. So that's another thing to factor in. And unless you're a blood relative
Yeah.
of mine, you should really shop your insurance every, 2 to 3 years. Insurance companies, they don't like jumpers. They don't like the
Mhm.
6 month annual jumpers. So if you can,
Yeah.
stick with the company a couple years and then shop around, that makes a difference too. Because they go in waves with premiums and everything. When certain companies are high, certain are
Yeah.
low, so you want to make sure that you don't like jump around and you should bundle. If it's personal, you should bundle your home and auto together. And then some
Yeah.
companies for like rental properties and everything,
Mhm.
they'll do you can do a blanket policy where they'll do up to like 10 properties on one policy. And they have their pros and cons, but as far as filing claims, if you have a claim on a house that you live on now and you're moving, you're buying another property, the claims go with you. So everyone will get
Yeah.
mad and be like, "Oh, I filed that at a different property." Well, it's going to follow you. So that's the thing is
Yeah.
like make sure when you actually file it, not get advice on it. Always call your agent to get advice on it.
Yeah.
But, filing little claims for things, they bite you in the
Yeah.
long run. So because insurance is
Yeah.
for the things you can't afford. If it's something that you can afford, don't file it because it's not worth
Yeah.
it in the long run. Because that's one thing you're always going to have is insurance. And it's also a good
Yeah.
thing if you want to get rid of somebody at a party. If they say, "What do?" You say, "I sell insurance, I own an agency," and then you're standing there by yourself. So that's one of the good things about insurance. So just kidding. Yeah.
That's funny.
Yeah.
Um, what's interesting, in renter's insurance, I really didn't fully appreciate it in the early years, but I did later on when I belonged to the apartment association and people would tell me these stories. And I thought, well, I'm going to require my tenants to have it. So for all of the listeners right now, that if you own rental properties, what you can do is you have your own the property policy that you own as the property owner. Even though you don't live there, you own the property. And usually, if you have a mortgage, the bank is going to be named as additional payee to protect themselves, because in their bank policy, in order for them to give you a mortgage, you have to guarantee you have to have your property insured. Although they can call in your note, your mortgage, the note on your mortgage. Well, on the rental policy, what I did is I learned this is have my tenants get the policy, of course, in their name. They got to pay for it, but name me as additional payee. So if their policy lapsed, they didn't renew it, I would get notified. And the other thing it did is it actually protected me too, because if they had a party and somebody slipped and fell or whatever, if their rentals and the tenant, had the party, their policy would kick in first before mine did. So it's a tremendous benefit. It's so inexpensive, guys. I mean, you could actually add it to the cost of your lease if you want to do that, and then you just paid for it of that. But I'm honestly don't do too much for your don't do more for your tenants than needed that's needed. Make sure they have some responsibility in this other than taking care of your unit.
To
There
be
was
in
something
their
else. Oh,
name.
I know what I was going to ask you. Oh, go ahead. I'm sorry.
Yeah,
Mhm.
the rental insurance has to be in their name because it would be their
Yeah,
policy.
yeah, yeah. Hey, a couple things. You mentioned that when you file claims, that follows you around. I know that for a fact. There's a database on that, but I know there's another database, and I can't remember what it's called, Jill. But it has to do with the properties themselves. And the way I came across this, I was looking at a property to buy, and it was remodeled. But I just had this sense about me. I said, I think the place was on fire one time. It just things that weren't adding up. And sure enough, I called the insurance guy and he said, "Hey, Gary, I'm going to run this against the such and such database." And he came back and said, "No, no, that place was on fire 10 years ago." And he said was, and he said they care about the structure, like the 2x4s and the studs and all that. If those were burnt, he said, you're probably not going to get that place insured. What is that something the public should know about, or are we allowed to know about it? I don't know, you know.
You sign up for an insurance policy or get a quote. So when you are
Mhm,
looking at properties and you know this is something that you're interested in, you qualify
mhm,
for financially, and you put an offer in, you can call and get a quote. Or if
mhm,
but the insurance companies, you want to allow them to run the consumer reports. It's not,
mhm,
we call it an insurance score. It's not a credit score. It doesn't hit your credit, but it pulls up if there were claims on that particular property and any claims that you have filed. So, and
okay.
it's the actual reporting database, and this is for auto and homes. It's called LexisNexis. It's kind of a weird name, but it's
Ah, okay.
LexisNexis. So that would
Yeah.
pull up any prior claims if they filed them through insurance. If they never filed a
Mhm,
claim, then you would have no idea that the previous owner would have to disclose that, in their
mhm.
disclosure document. So, but it's
Yeah.
LexisNexis that pulls the reports. And so you just,
Awesome. Mm,
yeah, so you could come say,
mm,
I mean, but if it was at the house and it's not your claim, you can, like, I can remove it. And like I said, Pennsylvania and Ohio, I just put loss was previous owners. But if it's
gotcha.
your claim that came from you from your previous house, you can't remove that. So it follows you.
Okay. Okay. Um, I know we're going to run out of time here pretty quickly, but I want to get into the deductibles, which is always the thing that when rates have gone up a lot the last few years since the pandemic years for everything, car insurance, everything's gone up, and everybody was surprised by it. And I had people tell me, "Hey, I'm gonna lower my coverages. I'm gonna, you know, raise my deductible so I pay less on the premium." And I'm thinking, that all looks good on paper until something happens. Then you could be in a real pickle. But is there a general rule of thumb, or how's that conversation go with you when you're talking to clients who say, "Hey, Jill, um, I want to low the lowest premium possible. I'm willing to struggle through a, two, five, 10,000, whatever the highest deductible is on a claim." I mean, any logic or good like an example there you can share with people of why you really want to think twice about that, you know? Mhm.
Check the rates. Because sometimes it makes a difference, sometimes it doesn't. But like certain insurance companies, they'll say like 1%, and people don't pay attention. So if you have a $400,000 home, you're going to pay a 4,000 deductible. So you want to make sure that you know what your deductible is. And then there's always two deductibles. There's wind and hail, and then there's everything else. So you want to make
Okay.
sure, and you can have different deductibles. You can take 1,000 like all peril, and then like wind and hail, you would have like 2,500. So when I bought my one house in Florida, and I told the lady when we were doing the insurance that I own an agency. She wasn't really paying attention to that part. So when she sent
Mhm.
me over the documents, she had me on for, wind and hail in Florida for like a 2% deductible. And I'm doing the math. I'm thinking like, yeah, that's probably not going to work for me. And then I said, well, what is it if I did 1,000? It was
Mhm.
$20 a year
Yeah.
to go from
Yep.
like, almost a 6,000 deductible to 1,000 for wind and hail. For $20, I'll take that anytime. So you want to check,
Yeah.
because it's money in, money out. What would it save you to take a higher
Mhm.
deductible? But for $20, that wouldn't put a dent in anybody's day. And it wouldn't affect
Yeah.
my rate increases down the line. So you always want to check depending on, because the minimum most insurance companies that you should have is at least $1,000 and up. But it just
Mhm.
depends on, how much you want to co-insure. Because if
Mhm.
you can
Yeah.
afford 2,500 and it saves you like $100 a year, or whatever, it's all dependent on like what you're comfortable with and what you can pay in the event that you have a claim.
Yeah.
So that's how I say it. Insurance is definitely for the things you can't insure, because you're better off to have more coverage on the back end, because little things, you don't really want to file them anyway. But like again, if you're
Mhm.
a new homeowner starting out and you have a 1,000 deductible and you're overwhelmed by that, then stick with 1,000. And you should
Yeah.
also, you know, there's people call it mortgage insurance. All it is, that's a decreasing term insurance. Go separate,
Yeah.
get a term policy. So if you have a 30-year mortgage or whatever, you're not going to need all that money in 30 years. Just take a term policy in event something happens to you that you could, pay your bills because it's cheap. So if
Yeah.
you got a 20-year level term, the premium and the coverage stay the same for 20 years. So if you're young starting out, you may want to do that because it's not a lot of money and it protects
Right.
you in the event that something happens. A whole life policy, that's down the road, because term, it's like going to Sam's Club or Costco. You're just paying for insurance, and
Yeah.
that's a good thing to have. And also, when we were talking about rental properties, insurance companies don't like properties vacant over 30 days. If you have
Yeah.
a property that is vacant over 30 days, it's probably going to have to be like rewritten as a vacant property, and those are
Mhm.
pricey. Unless you live next
Yeah.
door, you check on it all the time, that's not a good thing to have. And also in the landlords, there's vandalism and there's burglary. So burglary is I break in, say, Gary, you have a stove and a refrigerator there, and I steal your refrigerator, which isn't highly likely to happen unless you have a furnished place. So a lot of people don't get burglary, but they do get the vandalism slash mischief. Because if
Yeah.
you say, Gary, hey, Jill, I want you to move out. And I say, Gary, I don't want to move out. Like, I'm just not going to pay my
Mhm.
rent, but I still want to stay here. And I trash the place,
Mhm.
that goes to vandalism. So you want to consider having vandalism if you don't know the person. Now, if you have like a relative or
Yeah.
a close friend living there, that's a different story. But that's one thing on rental properties that we've had, claims for.
Yeah.
So,
Yeah. 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 Rental properties. You know, I'm glad I had all the ones I had all those years. I mean, it basically set me up and allowed me to do the other things I really want to do. Um, but boy, such a learning curve. The IRS calls it passive income. Rental income is passive income. That might be true on paper, but in real life, the word passive means something completely different. And rental properties is anything but passive. Um, again, I've got to sneeze here 1 second.
bless you.
Excuse me, thanks. I
Well,
got the
and
mute
that's
on
the
just
other
in time.
thing too,
Mm,
Gary, is if you have somebody that is going to do
mm,
work at your house, whether it's a plumber, contractor, you have to make sure that they are insured, because insurance
mhm.
companies will not pay for faulty work. So if you have somebody cutting a tree down and it hits the side of your roof, oh wait, that happened to my sister, and the
Yeah.
person doesn't have insurance, then you are responsible. They could just skip out. You'd have to sue them personally. You have to make sure that anyone that
Yeah.
you allow on your property, because if they get hurt and they have no insurance, then you are up the river. So you want to make sure that
Yeah.
anyone who's working on your house has insurance.
Yeah. We did require that too. We always, and whenever we brought people in, because the contractors are always third parties, 1099s. We didn't, we only had one employee on the maintenance end of things, and he was just like our front person. When something would happen, we'd send him out immediately just to be, first responder, give us the rundown on it. And then we knew what to do as far as bringing in the contractors. But contractors all had to be insured. And on top of that, the electricians and plumbers, we also had them they had to be bonded because their work is more sensitive. There's more, potential risk, particularly electricians. I mean, good Lord, you have faulty electrical work, you could have some serious problems.
And
So,
also when you're buying a house and you
mhm,
know when your closing date is and everything's been approved,
mhm,
bind your insurance policy. Because some of them, and
yeah,
you have to ask about an inspection. Just because you're buying it and they passed inspection doesn't mean it would pass the insurance company's inspection. So you can ask them, is there going to be an inspection? Is my inspection waived? Because that's something that you have to consider. And don't wait till the last minute, especially with commercial insurance. It's not like you're going through McDonald's and I'll say, I'll take the number three.
yeah,
Commercial insurance takes longer to go through because there's
mhm,
underwriting and different things involved in it. But like your homeowners, you want to get that taken care of ahead of time. And most people, if they escrow it, you don't have to come up with any money at closing. But if you have to have a flood insurance, insurance companies will not first year escrow flood insurance. You have to pay that in full. And
yeah,
always there's FEMA and then there's private flood companies. So like I'm flood certified, so you can run it through both places. And depending on whether you want your contents covered or just the dwelling, that you can, and most people only get the flood insurance up to the amount of their loan. So you can kind of lower that every year until it's paid off. But you always want to check if someone says, "Oh, don't worry about flood insurance," you should worry. It's expensive because if you're required to have
oh
it,
yeah,
you're in a flood zone, something that had a flood within the last 100 years. And some flood insurance it's pricey.
yeah,
So
especially the last several years.
yeah, that's
So
something to
I know when,
consider when you're getting homeowners is do you have to have
yeah,
flood? Because if you do, you really need to shop that beforehand because that
yeah,
could make a difference between you buying a house and not buying a house. Because it will not be
yeah.
escrowed. You take that to closing and you have to pay in full.
Yeah, absolutely. I mean, everybody needs to check out and to see if we're in a floodplain and what 100 year, 500 year, that kind of thing. Even if it's 500 year, some mortgage companies may require some. I don't know. The one I did required it on mine. I'm glad I had avoided it. Man, oh my gosh, I can't. I don't know what I would have. If I didn't have it, I would have been out of business. You know, so because it doesn't. The regular homeowners policy doesn't cover that type of damage. It doesn't cover floods from storms and stuff like that. So
Unless you have flood. And the other thing
yeah.
on homeowners is now companies do offer service line coverage. So if they have to dig in your yard, for your water, your gas line, they offer that. And
Mm,
no policy covers water backup. So if you have any water or sewage from the outside that backs up through your pipes, you have to have a
mhm.
separate rider and it's a water backup. So that's
Yeah,
something to consider too, especially if the house is older.
yeah,
You just want to make sure that you would have that, if you wanted that covered, it's available. So
yeah. We know it's interesting. I mean, I know we got to wrap this up, but I just want to mention this to people. In the floods in 2004 in Western Pennsylvania, we had properties up on top of hills. I mean, these were big, essentially mountains, and they were getting water in the basement. So I'm like, that's impossible. But what happened is because of the way the old storm systems were set up and designed, and often they were combined, there was one sewer system, it wasn't storm and sewage separately. Because of all the pressure on the system, the sewage system, water was being forced back up the pipes, up these mountains into these people's properties, and some of them we didn't have that kind of coverage on, and we had to pay for it out of pocket. Thankfully, it wasn't many, but that was a total surprise. I had no clue based on the laws of physics that was even possible, but it does, does happen. So,
Yeah, that's your
yeah.
water backup. And the only thing
Yeah.
is we didn't cover was other structures. So
Okay.
anything not attached to your house goes as another structure. And normally you get 10% coverage. It's 10% of your dwelling. So if you have a $200,000 in coverage, it'll cover up to 2,000. And that's very inexpensive to increase. And that's like if you had a shed, a detached garage, things like that. So,
Okay.
but everyone's like, I don't have anything, but you always get 10%. There's no additional cost and you can increase it. So that
Yeah.
isn't, that isn't bad, but just make sure that your liability is up there now because like I said,
Mm-hmm.
people are nuts.
Oh yeah. Yep. People will sue gambling that you're going to cave in or they're going to get somebody to just settle. But hey, I tell you what, this has been really awesome, and I it's such a unique subject, and I'm glad that this came up. I'm glad Beverly introduced us. So, how can people get a hold of you? I know you're in Ohio and Pennsylvania, but really, if somebody calls you from Idaho, because of the company you're in, it's out there too. You can still talk to them and get them in the right hands, right?
You're always in good hands with Allstate.
There you go. I couldn't have done that better if I planned it.
And mayhem is
So,
everywhere. Yeah, so we're nationwide. We can always find an agent for you.
okay. How about the website, email address? What's the best way for people to reach it?
Yeah, my email is just jbrumbaugh@allstate.com. And
Okay.
if you Google Jill Brumbaugh Allstate, it'll take you right to just click on it, it'll take you to our website. And you can do an email there. We're 724-220-1046 is our phone number. Now, Allstate has a phone system that is not agreeable to 99.9% of people. So when the recording comes on, you just say agent, it'll take you over to the agency.
Okay. Okay. So so Jay Brumbaugh and everybody listening, if you're driving, don't write this down. We'll put it in the show notes. But it's BRUMBAUGH and J for Jill, Jay Brumbaugh at allstate.com. And the number 724, I think it was 220
220
1046.
1046. Yes.
Gotcha. Okay. Well, Jill, thanks again for doing this. I mean, this was a pleasure, and
Yes, and thank
I know
you.
we're going to have you on class also Monday night. I mean, this has been a nice surprise, and I really appreciate it. So,
Yes, and if
yeah.
everyone could cheer on my Yukon Huskies men and women's team, that would be greatly appreciated.
Oh, that's right. Hey, start.
Yeah.
I got my pool set for. Of course, last night was the preliminary games, whatever they call that. But tomorrow's the big day, and UConn. I tell you, we should tell people this. Go ahead and tell them what your college experience was.
It's fantastic. I mean, I played for Gino Ariema and Chris Daly at UConn. 4-year
Mhm.
starter at UConn, and it was a great experience. And I'm always
Yeah.
cheering on my Huskies. And the last 2 years, we have a family pool for the NCAA, and
Mhm.
I pick UConn every year. I can't pick against my people. So my
Yeah.
my nephew-in-law Austin, who runs our pool, and he's all about sports. He writes for the Athletic. It's Austin Mock. He's
Okay.
incredible. Any sport, anytime, anywhere. And he always said he goes, you lucked out. He always said you lucked out 2 years in a row. So I said we're going for the three-peat. So
There you go.
hopefully you'll be good. So
Yeah. Well, that's awesome. And by the way, you probably remember in those days, Old Dominion women's team had a pretty good team for several years. That's where I went to school, and we used to watch it. Just amazing. They won several championships, but UConn, you guys just crushed everybody. I mean, year after year after year. So we knew we'd only get so far as long as you were on the court. It's just another coinkydink, another interesting factoid. So. Well, listen, I appreciate this, Jill. I appreciate you listeners listening to this. Remember to leave your review and say happy birthday to Jill. Okay. So we appreciate you doing that, and we will see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.